record and admit. Hello, everyone, and welcome to the Validate Venture Partners Malta Accelerator program. I am AJ Siegel from Validate Venture Partners, co-managing partner, and I got here Guillaume Clough, my esteemed co-managing partner at Validate Venture Partners. Guillaume, say hello.
Hi, everybody. Pleased to meet everybody through this webinar. Through this webinar, we'll give some introductory information about our accelerator program that is set to start in 2020. But before we get into all that, we'd like to give everybody some more information on what they can expect and all the goodies that they'll be able to experience and receive during the program.
Okay, wonderful. So first, we'll give you a quick intro about Validate Venture Partners. We mostly deal with fundraisers for, well, we usually work with the investors more than we work with the startups, raising funds for VC funds, private equity, hedge funds, accelerators, and incubators. We stumbled upon this opportunity around 2-3 months ago through a connection of ours in Malta, where we understood that there was only another accelerator in the country, which is operated by the Maltese government, which means that bureaucracy-wise, it would probably be much more of a headache for startups in the country. But, and this is the reason why we chose to go for a privately owned one by us and our local partners in Malta, which will be delving into which one is which in a series of webinars about the Malta Accelerator and the type of, naturally, the opportunity at hand. Now, a little about Malta. Malta has been one of the primary advocates of cryptocurrency in the last couple of years, the first to really regulate cryptocurrency as a legal tender in the European Union. Because it's part of the European Union, it means that startups in the area can operate very quickly in the country. Their time to market is very, very, very short. And it means that there are tons of benefits for startups operating in the country. Not necessarily just the foreign ones that come from like England or anywhere else in Europe, but for Maltese startups in general. So that's a little about Malta. Great view. It's on the Mediterranean coast, very close to Spain, Portugal, the United Kingdom, and other countries in Europe. It means that operating through Malta would be quick and efficient. It's very easy to to fly in and fly out of the country. It has commercial ties with almost any country on the face of the planet and not just within the European Union. And because it's part of the European Union, it means that everything is regulated by the European Union's Commission. So there shouldn't be a problem for anyone operating in the country in general. We're going to delve into the program, and I'm going to share the screen with everyone. So bear with me.
Right.
Okay, so this is the Validate Venture Partners Accelerator program in a nutshell. So generally speaking, about the program, 3-month program starting this January. January 24th, 2020 means that you guys can start the third decade of the 2000s in a bang, a real bang. 3 month program, January, February, March, means that the last day would be either the around the 27th of March or April 1st. So no, it's not going to be April Fool's, the pitch day itself, but it is going to be a bang starting Q2 2020. With €500,000 in your bank account, starting at 500,000. It means that some of the startups would be eligible for more than 500,000, but that's uh, that's the ticket sale in general, as we like to call it in the sales world. So
Yeah.
let's talk about the program itself. Program
Hmm.
setup, first month, first month in. So we mostly talk about assessing the current status of applicants. It means that we need to understand which one comes with which. The general criteria for startups is being alpha, at alpha, beta stage, and or generating revenue. It means that if you're in the MVP, POC stage, this program would be irrelevant for you because we won't be able to produce the right tools for you to use and grow your business. It would be relevant. We do have other programs where we talk about, the pitch deck in general, how to conduct a successful MVP or POC. This is something that you can PM me about on Facebook or LinkedIn, or you can connect with Guillaume about it and ask about this plan in general. So that's about that first month. Second month talks about either the expansion of your business, going overseas or going within the European Union, and naturally, if you need to pivot and decide on a different course of action. So it means, for example, you were talking about creating a new exchange, and then you decided, okay, no, we're going to first talk about like a token sale, or we're going to first talk about a new type of documentation, the changing of the business of our business model, or whichever. This is the pivot time. So it usually takes around 2 to 3 months to really pivot and decide on that course of action. And this is naturally that. For our own Validate Venture Partners partner program, you're able to not just start in Europe, but you can expand to the US, to Asia, and to the African markets within the next 9 months or so once we start our work in Africa. We do have an option for startups that are not present in Europe. If they're in the US or in Asia, we do have our partners in Singapore and we have our partners in New York, which can run the accelerator program for them in those countries. So if you're in Canada, the US, or in Asia and are unable to attend the Malta Accelerator program, you can definitely do so through one of our partners. Month three is divided into two parts, getting the better results and preparing the business for receiving an investment. It means that this is term sheet time. We're going to talk the limited partner agreements, subscription agreements, and naturally the private placement memorandum, which are, big words that translate into whether or not your startup is even ready to receive an investment. Guillaume can delve into this. Guillaume, maybe you should explain what a real term sheet is for the people that don't really know what it's like talking to an investor and getting funded.
Yes. So, as AJ just mentioned, In month three, we try to focus on, after all the work that's been done in month one and month three and month two. After that, we start focusing on, hey, what, how much is this startup actually worth? What is the valuation of this startup? And which amount of investment would bring this startup to that next level? And with us, as AJ mentioned earlier, the ticket size start at 500,000 euros. So we only entertain investments that are more than 500,000 euros. So that is in month three where we start looking at what is the valuation, how much did this startup actually grow within the first 2 months, and what makes our accelerator program a bit more special than the current landscape, the current accelerators already on the market, is that we try to hold ourselves and our participants accountable for their own progress. So it can sometimes happen that, let's say, it doesn't necessarily click with a particular mentor, then we try to get ahead of it before that startup actually kind of wastes time with that particular mentor. So we try to hold everybody accountable to make sure that this startup actually accelerates, truly accelerates. And as AJ mentioned, our program is actually spread out across all over the world, mainly in the US, in Asia, and in Europe. And we have established everything well, because what we're trying to do is actually make sure all over the world have access our tools and our which is really important for us, because sales are, you can say, um, the lifeblood of a startup. If a startup doesn't have sales, or if a startup can't connect with their target audience, then that startup will have some difficulty actually growing. So we're trying to give any startup, any applicant that applies to our program, access to not only the expertise, but also the market exposure, also the access to multiple markets. And on top of that, they are able to receive an investment at the end of it for in the excess of 500,000 or more. And at the same time, in month three, that's where we really make sure that they have all of their paperwork ready, and their paperwork can be in terms of the financial documentation that they need. As AJ already threw some big words already just now, explaining what are some of the things that we look at. So for us, it's really important that all of our startups receive some tailored expertise, some tailored guidance to make sure that wherever they are, they can actually grow. AJ?
Yeah. So exactly, that's what the main thing that startups need to understand. Many startups get to the point where they say, "Ah, I don't need any help with raising funds. This is super easy. If the product looks good, if my team looks good, I'm gonna get that investment." Now, this couldn't be farthest than the truth itself. Why? Because it doesn't really matter how you present yourself. It's how you present the product. It's not just the team behind it. It's not just the overall traction that you have, but whether or not this startup in general is a good investment. It means that if I put in half a million, or I put in a million, or 10 million, 50 million into that startup is going to produce better and better, and the betterment of traction within the next 3, 4, 5, 6 years ahead. So you can't just say, okay, this is awesome, this is great, and okay, we're gonna get that money. No, you're not gonna get that money just because of that. You'll get the money because the product has the ability of creating better traction for itself year on end. And this is something that people need to understand. Okay, I think that we covered most of the program. As I said, it's going to run through Malta,
Yes.
January 2020. So we're starting off a new year. Um, Naturally, we'll talk about the application process in general and later on. We're going to talk about the partners in the program. So we're not going to reveal every partner right now because this is going to be a series. It means that next week or in the next 2 weeks, we're going to have the first Q&A session with one of our partners,
Yes.
and then with another partner, and then with another partner, and we're just going to reveal them to you. But let's put it this way: whichever stage you're in, whether you're in alpha stage, beta stage, and or generating revenue, if you're looking to run an IEO, if you're looking to run an STO, if you're looking to do any kind of business in Malta or outside of Malta, and you're in the fintech or blockchain sphere, there's option for everyone involved. It means that we have the right partners in terms of legal help, setting up offshore accounts, sales, and any other spots that you may need. Tax wise, if you need an expert on US tax or within the European Union, when should you add VAT, when you shouldn't, GDPR, how it works for a startup that has like a European presence in general, or if you go overseas and you want to work with European clients in general, how it works, how how you generate and store data in general. We have our partners in terms of how to run a successful IEO, successful STO, or an ISTO, and naturally other types of partners that deal mostly with growth hacking and how to create out of those 10 millions you generated last year, how you make 10 into 40 and 40 into 100 within the next 24 to 36 months. Many people talk about the fact that no, we have a good product. No, there's a difference between a good product and a product that produces more and more money for the company involved, for the investors, that it betters the life of others, and that um, you know the 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 margins themselves become increased over time. Your profit margins themselves, that you don't waste too much money on something and you think that you made more money, but you're actually uh, going into stagnation, which is the difference between getting funded again for Series A, Series B, Series C, and needing to, close down early because of bad money management. And this is something that Guillaume could explain a little later on in our
Yes.
next webinar.
I think
Uh,
I can also
mhm,
give some additional information on our website, which is accelerator.validate.ventures. You can already, if you're even considering our program, you can already receive some information about our program. Other than that, you can also, depending on if you're serious about joining our program or enjoying some of the of our, you can say, of our goodies, you can already start signing up for them,
Yep.
because some of the products that we're providing are absolutely free, not just for applicants, but also for interested parties. So that is something that everybody can look into. Um, we look at the goodies as a one way to prove to everybody that not only do we want to provide some exclusive and some new types of added value to startups, but we'd like to make sure that it is clear that for us, we are trying to add value the most to our applicants, and that we tailor our expertise and our entire program to meet the needs of our applicants. Because at the end of the day, if a startup can't truly grow with what's on the table, then you need to switch it up. And for us, we try to keep it as flexible as possible. And that's why we work together with some amazing partners, which you'll be introduced to within the next couple of weeks. For now, if you are interested in um, growing your brand and expanding into new markets, or even just getting ready to raising capital in the excess of 500,000 euros, then go to our website or go through some of our social media accounts, and you can receive some more information. And if that doesn't work, please feel free to get in touch with myself or AJ on either LinkedIn or through email. And we can definitely give you the full scope of what we're all about, what our partners can add to you, and the full picture itself. AJ?
Yep. Sounds about right. Now it's time for Q&A from our peeps. So you're welcome to send in your questions through chat. We'll check what you wrote in chat, and then we can answer more intricate questions that you might have, in the micro scale and not the macro scale of the program. So now's the time if you'd like to send in your questions.
Sure. My name is Shub.
Mm-hmm.
Hi. Yeah. So my question would be, what is a percentage of equity that you have to dilute for
Okay.
500,000 euro?
Okay. We ourselves don't take any kind of equity from our applicants.
Mm-hmm.
There is a registration fee, which is within the accelerator validate ventures, based
Mm-hmm.
on whether or not you want to move into Malta or run, do the program in Asia or in the States.
Mm-hmm.
But as explained, we don't take any kind of equity. The equity itself comes from the investors that we have, and will be the ones in the pitch day that come to you and send over a proposal, give you a term sheet, and you can take it from there. What you should
Yes.
expect in terms of equity, it really depends on your negotiation ability, which could be improved by coming and joining the program in general. Our experts will explain everything to you when it comes to legal and tax options for each startup. Sometimes there's some kind of tax break in a different country. So even the money comes back to the investor to some degree, and then you can negotiate a better deal for yourself instead of like taking, I don't know, like taking 20% equity in the startup. You can keep 5% of those 20% and give it away to, for future rounds or for any future partner that might want to come on board.
Yeah, so it's really dependent on what comes out of month number 3. because as we explained, month number three is where we try to get all of our applicants ready to 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 receive funding. So that is when we'll work on getting you a valuation. So let's say your valuation is at 5 million euros, then you can already start calculating, okay, if my valuation is 5 million euros, then if I'm going for a investment of 500,000, then you can already calculate for yourself what that percentage would be. So that's how we try to make the most sense for our, not only our investors but also for our applicants, because then the applicants themselves can see, hey, we want to get to that next level and we need about 2 million to get there. Okay, we need 2 million to get there. Okay, what does that mean with regards to our valuation? Can we even support that much? So that's why with regards to equity, we leave that solely in the hands of the investor. Otherwise, just like any, well, the most accelerator programs, which take about 7% equity, then we would also take 7% equity. And then when your investor comes along, you also maybe lose another 10 to 15% equity. So we're trying to leave as much equity on the table for the startups to negotiate with.
I hope that answers the question that you had.
Yeah, usually what happens in US Accelerator, you are valued at X amount. Like you said, $500,000, $5 million. Usually, it's valued between 10 to $15 million. So, like if you're not going through Accelerator, if you're going directly approaching to various syndicates and Angel.com, or if you're going to a group of investors, you're valued at 500. You can easily value your startup for like $10 million, and you can raise around $500,000 for 10%. So that's the thumb rule. Whereas if you go to accelerator like YC or Techstars, they charge 7% for 1.5, like 105, yeah, $1,500,000. So that's a standard benchmark. Now, once you get through that program, once you qualify, or once you hit the demo day, that's when you are introduced to various investors, and on that day you raise the bridge round. So, at that point of time, you probably shell out some more equity. Mostly these investments are based on SAFE. I don't know if you've heard about SAFE. SAFE is a standard procedure for any startup investment, which is SAFE stands for secure, like for future investment, something like that. So YC has got their own SAFE. 500 startups has got their own version of SAFE. They call it KISS. There is another version which Techstars use. So all these accelerators use some sort of SAFE procedure, which involves like future equity, secure for future equity or something like that. Which combines a debt instrument, like based on equity, and a partly like very less on equity and more on credit. What do you call it? So yeah, so basically it's a kind of venture debt plus equity, less of equity and more of venture debt. So that's how it works. And they have actually come out with their own version. Each accelerator has their own version. One calls it SAFE, the other one calls it KISS, the other one calls it something else. So that's its standard feature. Whereas if you go to investors directly, you get straight away, you can get a deal of $500,000
Exactly.
or
Yeah,
10%.
exactly.
So
Okay.
that's the standard value.
The question is, other than that, do you have any other questions? In general, as I said, we don't take any kind of equity within the startups. There is an application fee. This is the only thing that we take from the startups, and then it's up
Mhm.
to the negotiations at the investor table between your startup or any other startup, and what the investor wants to invest within the business. Now, regarding the program itself, the length 3 months, as explained. Application ends November 15th, so there's
Yes.
a little over 45 days for applying for the program. You can apply even at a later stage, but it really dependent on whether or not there are enough slots open within that cohort. If not, then you move to a type of a waiting list for the next
Yes.
cohort, which is supposed to start around April or May 2020. That's for
Yeah.
that. Um, the partners, you can read about the different partners on a website on accelerator.validateventures, as you can see here. You can even learn about the different tools and resources that we give away for free or at a discounted price, such as an SEO readiness program. So it means that if you want to run an SEO, you need to understand what is, is needed for an SEO. It usually applies for IEOs as well, but it really is dependent on the type of fundraisers that you're looking to do, and not just the traditional fundraisers that you'd like to do with investors. And other options that we give is like a pitch deck checklist. There's a checklist that we have created through one of our subsidiaries, Create Startups Here, which goes over what investors are looking for when they read the pitch deck. You can have the most amazing pitch deck on the face of the planet, but if it doesn't make sense, and we had a recent experience with that about 45 days ago, 2 months ago, give or take, where there was something in the pitch deck that made no sense. And when the question arose with the investor, it just tanked and bombed, the entire conversation. So these are the things that you need to go over when you're running a successful, pitch to an investor. This is something that
Yeah.
we
And
give away for free.
and just to get back to the whole equity thing, one of the primary reasons why um, other accelerator programs have these other metrics like KISS and SAFE is because they work with, um, um, you can say, their entire deck of um, investor contacts. For us, we're actually working with some exclusive investors. So prior to us even accepting a startup, these startups are already kind of preferred by our investors, so that as soon as they get the green light from us, that's almost you can say, a guarantee that our investors have also greenlit those startups themselves. So for us, we don't necessarily need to have anything additional to kind of safeguard the program itself. For us, it's only a matter of covering the expenses of the program itself. And from there, we can provide the startup with whatever they need. And it's a smooth transition going into the, you could say, the investment talks. So I hope this kind of clarifies all of the topics with regards to the accelerator program.
Yeah.
Okay, wonderful. So, to wrap up this wonderful webinar, this explanatory webinar, and the precursor of the future webinars that we're going to have to hold about the Malta Accelerator. And next one, we're going to reveal some of our partners, which will join us for a quick Q&A. So be sure to join us next week or the week afterwards, really dependent on everyone's timetable and schedule, I suppose. Um, so you're going to receive a little more information via email in the next couple of days. And this webinar will go on Facebook as well and LinkedIn for everyone to enjoy. If you have more questions, you're welcome to PM me or PM Guillaume. And thank you for joining us for this webinar. And I hope this explained everything that was needed to explain. Okay, guys,
Sure.
enjoy
Thank you.
and have a pleasant evening onwards.
You too.